Hello ladies and gentlemen, boys and girls, and welcome back to another exclusive video. As you can see by the thumbnail, today we are going to be talking about two upcoming stock splits in reference to ETFs. That's actually going to be happening right around the corner. The first one we will be talking about is SCHD, which is the Schwab US Dividend Equity ETF. As you can see here, the fund goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, as you see here, effective after market's close of October 10th, which is right around the corner, this ETF will undergo a 3-for-1 share stock split. The ETF share split will apply to shareholders of record as of the close of market on October 9th, 2024, payable after the close of markets on October 10th, 2024. Shares will begin trading at their post-split prices on October 11th, 2024. Forward share splits increase the number of shares outstanding and decrease the net asset value per share. The share splits will not change the total value of shareholders' investment. So this is actually pretty interesting. Just to talk a little bit about SCHD for those of you who are not aware of it, at the time of this recording, which is September 29th of 2024, at the moment it's $83.72. Of course, that price may change at the close of market on Monday. But just a few basic things to point out here for this fund. The fund's inception is on October of 2011. So this one is about, let's call it about 13 years old. The total expense ratio, as you see here, is 0.060%. And in reference to the stock split, with it being at $84.24, if we do the math, and of course, the price is going to change between now and the actual stock split date. But as you can see here, if it were to do the 3-to-1 stock split, each share would be around $28.08 based off of the current price at the close of market. Now, keep in mind that amount will change, but that's just something to keep in mind. Now, if we come down here to the performance, as you can see, it's performing, pretty solid. As I mentioned, this fund is geared towards producing dividends. So for people who are looking for income, this may be right up your alley. As you can see, year to date, this one is a little bit over 13%. And when compared to the Dow Jones US Dividend 100 Index, that's also about 13% as well. Something else I just want to quickly glance over here is the portfolio. As you can see, some of the top holdings include Home Depot, Verizon, BlackRock, Cisco, Texas Instruments, Pfizer, Lockheed Martin Corporation, Bristol Myers, Chevron, Coca-Cola. So a lot of familiar companies. As I mentioned, this fund's purpose is to generate dividends. And if we come down here to the distributions, we'll see that this ETF pays on a quarterly basis. So March, June, September, and December historically is when it pays out. And as you can see, at least for 2024, in March it paid out 61 cents, in June it paid out 82 cents, and just recently in September 25th, the ex-date of September 25th, the dividend being produced on that one will be a little bit over 75 cents. So if you have 100 shares of that means that on on September, you'll get about $75 in the event you did have 100 shares. So that's a little bit about SCHD. Key important facts about this one is it is undergoing a 3-to-1 stock split, and that process will begin on October 9th and finish on October 11th. Now, the next one that we're going to talk about is going to be SCHG, and this is the Schwab US Large Cap Growth ETF. So this fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. As you can see, the stock split will happen on the same dates, just like SCHD. The main difference here is that this one is going to be a 4-to-1 stock split. This one is at 104.20. So if we were to do a stock split on this one, that would be at about, what is that, 26 and 5 cents maybe. Let's just do the math on that one. Yep, so $26.05, my apologies. Just some things to point out here. The expense ratio on this one is 0.04%. Total holdings, 231. And as I mentioned, this one's more so, as we can see here, a large cap growth fund. So if we come down to the performance, we'll see that this one is compared to the Dow Jones US large cap growth total stock market index. Year to date, that's over 22%. And the 1 year, that's up 32%, which is pretty solid. If we come down to the portfolio, we can see that the top holdings here are composed of pretty much tech companies, if you want to call it that. We have Apple, Microsoft, Nvidia, Amazon, Meta, which is Facebook, Alphabet, Broadcom, Google, Eli Lilly, and Tesla. So very recognizable companies. And as you can see, their sectors is heavily in tech, communications, healthcare, consumer discretions, communication services, financials, and industrials. And if we come down to distributions, which are in reference to dividends, you'll see that this one also pays out dividends on a quarterly basis: March, June, September, and December. Now the dividends on this one is not going to be as high as SCHD, and that's because SCHD is more so geared towards dividends. SCHG, like gold, is more so geared towards growth. But it is cool that they also do provide a dividend as well. So I am going to have the links for both of these pages down in the description. A common question I get whenever I do videos like this is, should you buy before or after? And the answer that I always give people is it's going to be based off of what you can afford. For me, SCHD, I do have about 15 shares already of SCHD. It's something that I dollar cost average, meaning that I just have a auto buy set to purchase X amount of dollars every week. So with those 15 shares, once that stock split occurs, which is going to be 3-to-1, that 15 shares will turn into 45. Now, I am going to try my best to possibly purchase about 18 to 20 more shares between now and October 9th. That way I'll have about 33 shares, and then once it splits, it'll be at least about 100 or so. And the reason I want to do that is because going back to the distributions, right? When my dividends do start to pay out on a quarterly basis, in this example right here where it's 75 cents, well, if we do the math on that, 100 times 75 cents, that means that I'll start getting paid out quarterly anywhere from, as we can see historically, anywhere from $60 to $75 every quarter, which is pretty solid. I initially want to get to the point to where I can eventually live off of dividends, but that's not something that happens overnight. That's something that you have to work towards. With a stock split, I mean, it really makes it a lot more achievable for some people because we can, our amount of shares multiply. So whether it's best for you to buy before or after the stock split is totally based off of what you can afford, right? If you can afford to buy a share, which is currently at $83 a share or $104 a share, then you might want to wait until after the stock splits, because in this example, that stock will be a little bit less than $30 a share, or a little bit less than $40 a share, I should say. And with SCHG, which is more so geared towards growth, that will be a little bit less than $30. So in a nutshell, do what you can afford. I hope that you all did find this video helpful. If you do, Make sure to like, share, and subscribe. It really helps the YouTube algorithm out. And I'll catch you all on the next one, folks. Peace.